So I think we might be able to mine the next Bitcoin on rented GPUs. I'm over here looking into BitTensor. The chat has convinced me on it. They said it's like a six-figure play, maybe. I don't know. I don't know anything. Actually, I know a little bit about it now. And what got me excited is that we might be able to use rented GPUs and use our machine learning knowledge in order to get an edge on BitTensor. Now, someone said that BitTensor is, in their eyes, the next Bitcoin with all the developer activity that's going on. Now, of course, he's very, very biased as he is trading it, dude, or he's mining it. He says to me, it's the next Bitcoin after watching the devs. Now, obviously, there's only a tiny, tiny, tiny percent chance there. Tiny percent chance, and there's never going to be another Bitcoin. But I get what he's saying, and I understand his bias. Danny says directional risk for sure, but no risk, no Rari. Oh my god! Because I was wondering, is this going to be like a something that you mine like Bitcoin at $2, right? And I'm sure a ton of people mined Bitcoin $2 on rented GPUs and then just paid off those GPUs with their profits. That's a big L when they could have been directional on it and kept those $2 Bitcoins and held it to whatever it's at now, dude. If you were a little directional with the mining. So I was curious, is it an arbitrage right now? Or do you have to be directional? Danny says directional risk for sure. No risk, no Rari, though. Maddie says there's a limited supply. It could be huge in the future, in my opinion. He's also the one that said after watching the devs, he thinks it's the next Bitcoin. This is the actual white paper here. We read through some Reddits, but it's very, very. You can Google BitTensor Reddit mining. There's very little information about that. We were just talking about how there is an edge in crypto when it's hard to do things. Because while crypto people are smart, ambitious, sometimes lazy, and don't want to go to new chains or set things up or don't know how to code, we know how to code. We got AI. We're the only ones that can use AI, dude. We're the only ones that get benefit. King Alfred says, looks like the token is trading between 250 and 700. I haven't even looked at the token too much. Let's look at it. I looked at it briefly. So what is this? The highs were December 6th, 2024, and it is down 50%. Okay. So the lows are here in 24 as well. Oh, it's new? No, probably new on Binance, right? So the lows here are 200. It sounds like there's directional risk here. So it'd be one of those plays of, hey, if this actually is something in the future. I've heard people down here talk about it in PR, so I've just faded it entirely because Solana has all the volume right now. At least this last 18 months or so, it's had all the volume. So I think today I'm going to give it a fair shot because I've seen every single.
We must keep moving. We must keep going. If you can't fly, run. If you can't run, walk. If you can't walk, crawl. But by all means, keep moving.
Every single arbitrage, every single narrative, every single thing that has popped off in the last year or two has come through this chat early, very, very early. You got to follow the devs. And what are we? We're data dogs. So I got it when somebody says to me it's the next Bitcoin. I don't know Maddie at all. But when somebody says that, I wanna look into that bias. You know? I got time. That's one thing I do have is time and the ability to code forever. And I love this game. Let's see what else others have said. Love your inspiring vibes, Moondev. Thank you. It's its own chain. So that's I was looking up on Bird Eye over here, like Tau, BitTensor, but it's its own chain, dude. So let's close all these tabs. We were exploring BSC earlier today. over here reaching, trying to figure out if there's
Hi
any
there, Doug from
rotation.
Towstat.
Here's a couple of
Hey,
videos
Mr. Travis.
I want to watch here. Maybe we could start with these videos, these 5-minute videos here, and then dive into the white paper because then we'll understand the white paper better. So let's do that.
One of the most frequently asked questions is, how do I start mining on the BitTensor network? And the answer is a kind of an interesting one. It's very different than most other.
There's a tweet about subnet on Tau that uses 30 to 40% of the whole LLM mind share. It's either DeepSeek or OpenAI. Ask AI to read the white paper. I'm just gonna read the white paper. I ain't got time to read it yet, so I asked AI to summarize it real quick. Nice, dude. Yes, it's still early mining days for Tau. We'll see. I do want to see when was it launched because I see it Binance not that long ago. So it's called Tau here, BitTensor. Oh man, it's 7 billion market cap. Okay, so it's been around since back here in 2023. Okay, a couple years. Couple years late, Moon. Don't worry about it. Just a couple years late. Just a couple years.
Blockchains is that you don't actually mine on BitTensor. The mining is done on the various subnets. And this image of a miner is actually created in subnet 19 by a miner. There are 32 subnets on BitTensor network. Each subnet is working on a machine learning problem or creating a digital commodity. As a result, they're all very, very different, and they all have very different requirements and different code for mining. So you don't actually, that's why I say you don't mine on BitTensor, you're actually mining on the subnets. Each one of the subnets has space for about 200 to 220 miners. That means that mining is also a competition. And if your miner has the lowest active key for a subnet, you're going to be deregistered when a new miner registers. So it's important to realize that not only is mining challenging in that you have to pick your subnet and then become an expert in that subnet, but it's also a competition against all the other miners. The way you pick which subnet to mine on is by doing some research. And at Towstats in our documentation, you can see a listing of all of the subnets. And for each one of the subnets, we'll have a link to the GitHub and a link to the hardware requirements for mining and validating on that subnet. The GitHub generally has a very good README that describes the steps that you need to do. It tells you a little bit about what the subnet is doing. And then it may also have links to other documentation so that to help you get started understanding what the subnet does and how the subnet works and how you can mine on that subnet. The min compute YAML generally has the hardware requirements, so you can see how many CPUs, whether it needs a GPU or a CPU, how much memory, what OS, et cetera, how much storage you need. Another way to do some of this research is to get into the BitTensor Discord. You can see each one of the subnets has a channel. You can see when I took this screenshot, there was actually a release for subnet 1. So as you read through these messages, you can get some hints, some tricks. You can read about mining, where people are struggling. And then you can also look up at the pinned messages. That's generally where you will find the release notes, where you will find changes and things that the mods for this, the subnet owners have decided to share and have made important, so they'll pin them to the channel.
Yo, why I got such ghetto internet out here, dude? 480? Why would you ever default me to that?
Another way to learn about the subnet is to go to Towstats. And on the registration tab for the subnet, you can see how much it costs to register. You can
Julius says BitTensor is just another ERC token.
see that at this point for subnet 1, it's costing 0.05 tau. You can also see it changes over time. So maybe you're like, oh, this is a little high right now. I'll wait a few hours for the price to go down. That's fair. When you register a node on the subnet, you'll be granted an immunity period. And so that immunity period helps you go from 0 emission to a higher amount of emission so you don't get deregistered right away. You can see you can use the BitTensor command line. You can hit subnet hyperparameters. And for subnet 1, the immunity period is 4,096 blocks, which at 12 seconds a block is about 13.5 hours. Each subnet has a default miner that you can run. Now you can imagine with 200 plus miners running on a subnet, if everybody's using the default miner, you're not going to pull ahead. So everybody's modifying the miner, right? Everybody is making changes so that they're better than the other miners in the subnet. So you can try it with the default miner, but you might want to test it out and see what you can do to improve that miner so that you float to the top. Once you've tested out your miner, you've made your modifications, and you're ready to launch, you can use the again the BitTensor command line to register your hotkey, and you'll need a little bit of tau on the cold key to make that work. And now you're up and running. You'll want to track your incentive in the subnet metagraph. The incentive leads to emission, and then of course emission leads to the tau that you will earn. And as your emission grows, you can see.
Hold up.
And as your
Daily 0.89. So he's making 400. a day, 400 a day, 416.
And as your emission grows, you can see here in this chart, the orange miners all have immunity, and this blue guy right here is the lowest active key. So when somebody new registers, this guy's out. So you want to modify your miner so that when you come out of immunity, you're up here, or even ideally way up here. But you want to find your way up into this space where you're safe so that you don't get deregistered. And you can do the mathematics of like how long you need to stay active to pay for the registration costs and your machine costs and all of that. And you...
Nah, dude, what did I just do here? He said that Ethereum has way more volume than BNB and others on CoinMarketCap. You're right, dude. Check out the USDC and USDT, though.
Your own personal economics decide whether it's working for you or not. TauStats has a wealth of information about like how long you need to stay active to pay for the registration costs and your machine costs and all of that. And your own personal economics decide whether it's working.
364 here. Validators here. I just want to see how much they're making, dude. USD price. How much are people making per day in Tau? Because then, I mean, if you take directional risk, you know how that goes. These are all the subnets. So to me, it sounds like there's 32 different subnets here. Let's see. This looks like 64, but you know, you're actually mining on a subnet, and you get removed if you're not in the top 200-ish, 220. And do some research on the subnet. GitHub has the README here. Keep improving. Who said Tau is at ERC20? Just reading about it, and it's definitely a separate protocol, not ERC20. Also, just read Zach BTC from 7 months ago report that BitTensor halted their chain for a while, June 2024, due to thefts and private key leakage. Damn, dude. That's some good intel, bro. Some good intel. I'm gonna go ahead and pop up this next video here. That was solid, bro. That was solid. Solid.
The Tau Templar. This is a miner overview for BitTensor. First, let's review how Bitcoin mining works. In Bitcoin, mining consists of buying specialized machines with specialized hardware to guess the next Bitcoin lottery number. The first miner to broadcast to the rest of the network the winning number wins. In BitTensor, mining is very valuable, specialized work. We have miners and validators. Miners do the work, validators check the work. Work is different between each subnet. The storage subnet will require you to have a machine with high bandwidth and storage capacity. The price prediction subnet will require you to have a strong knowledge of trading. The ads subnet will require you to have marketing knowledge. The AI subnets will require you to have some AI knowledge. Miners are rewarded for doing their subnet's unique work. Right now, the maximum number of nodes within a subnet is 256. Most of those are miners, with a couple dozen being validators. So let's go through what is required for setting up a miner in order. First, you want to choose the subnet. They're all done.
Nice. Yes, our slogan must be learn, baby, learn, so that we can
Earn, baby, earn.
Vastly different. Consider mining a subnet with less competition and therefore lower registration fees. The trade-off here, though, is that a new subnet owner probably has a less stable subnet and poorer documentation, which can be difficult when you're first starting out. So there's a trade-off there. Then jump on the subnet's Discord. There's a lot of information there. You can read through past messages, find some nuggets of wisdom. Then, if you click in Discord at the top on the pinned messages, every subnet has documentation, and you can find it in the pinned messages. Read through that. Once you've read through it, try running the code locally. Make sure it will run on your computer. Next, you'll want to look at renting a cloud miner from AWS, Azure, etc. You're going to use the information you got from the documentation to figure out what sort of machine you'll need to rent from the cloud provider. Highly recommended to not buy something right away until you're more confident about the specs that you'll need. Next, you're going to want to get that cloud miner running on the testnet. The testnet is a great way to get comfortable with the CLI and just confirm that everything's going to work when you go to the mainnet. Then you're going to pay your registration fee. The registration fee can range from 0.1 tau to 10 tau, depending on the competition within your subnet. Once you've paid that registration fee, you can finally get mining. You can monitor your miner using the CLI or tausets.io. And then the very last step is forever optimize. As I said before, when you read the documentation, you find that the base code for the miner is included there, publicly available. The code for the validators is there. You can privately add whatever special sauce you might want to your miner's code, as long as it satisfies the validator code when it goes to check your work. So to make more money, consider the type of machine that you're getting. Maybe you're overspending, you don't need one as powerful as you bought, or you need something more powerful to get more rewards. Then code optimization, like modifying the base miner code, as I said earlier. And then maybe you've got some sort of special sauce, you've got access to some non-public database that you can use to train on, some special thing that you've got that nobody else has. Mining is highly competitive. Other miners will be making the improvements that I mentioned and other ones if they can think of any. This leads to one dynamic to be aware of. You'll get help in the Discord from subnet owners, but you're not going to get help from other miners. They're disincentivized to help a new miner get set up. This competition means that in the next year, on larger subnets, each individual miner will likely become a full-fledged business with employees. We're already seeing this on the Bitcoin price prediction subnet, Taushi subnet 8. So if you're a dedicated developer who's excited about a particular subnet, jump in and start mining. It may well be a path to owning your own business one day, and there's a crap load of opportunity within BitTensor. If you're checking Reddit or YouTube, you won't see that activity. If you're checking Twitter or Discord especially, you will. There is a lot of activity going on in all various subnets channels within the BitTensor Discord.
All right, dude. What do you guys think? Kyler, good. I'm glad you're here, bro. Glad you're here. How are you fucking here, though? Tell me how you're here, dude. What time is it in Hawaii? Tell me how you're here. Are you a night owl? Are you a night data dog? Time in Hawaii. 4:07 a.m., bro. Are you up early or are you up late? Tell me that, bro. I'm glad you're here. I would love to hear your thoughts on this after you do some due diligence, as I am. Lewis says cap. Cap, cap, cap. What's cap, bro? What's cap? I don't know. It's like 4:37. God damn. Okay, cool. You work nice. Good, man. I'm glad. I'm glad that we can lock in together here somehow. I work mornings, you work nights. Perfect. Locked. Locked with my Hawaii brother. Okay, I can say that because I'm not on the island. I won't get killed for that, you know. Pretending I'm Hawaiian and shit. But scuba. Shoes ba, shoes. Anyways, I'm somewhat interested, but I don't Hey, sorry, I think my mic dropped. The one thing I don't know is how much can you currently make? How much can you generate per month? Is it like you can break even per month and then you take directional risk? Or is it, can you cash flow each month? Okay, this is going to be super funny if I get into this too. I'm going to fuck it up for everybody. No, I'm going to make it, I'm going to equalize it for everybody, but it's very PvP clearly. Like if I figure out optimizations, you're going to figure out that optimization. And then 100 other people are going to figure out that, or 20 other people are going to figure out that optimization because I do it live here. So I might be the most hated person on the whole BitTensor network, but you guys got to throw the 777s, dude. If I get up in there and I start building here, bro, you got to keep the vibe right because I'm going to uncover the secrets they don't want me to uncover. And it's all going to be on YouTube, dude. It would all be here. It would all be here because I believe code's a great equalizer and it's bigger than me making money, you making money. It's learning to code, number one, and seeing that, hey, you can actually turn code into generational change. I'm not going to say wealth because I'm not a financial advisor, bro. Read that, please. In case the boys are here, boys, this is my disclaimer, boys. All right? This is a disclaimer. I'm not a financial advisor. None of this is financial advice, dude. Just a degen here. And I try to use my newfound coding skills to get an edge. That's all I do around here. Now, this is a very PvP thing here, BitTensor. It sounds. I don't know what type of money it can generate. I know nothing about that. It sounds like you have to take directional risk here. It's like mining today with the thought that BitTensor is going to be way bigger later. But it's very PvP, meaning everything I find out, it's going to be shown here. So there's my edge gone. Boom. But if this gets 1,000 new people to code, dude, guess what? 1,000 new developers that use AI. AI is the biggest shift in the world, and it's only for coders right now. We're the only ones getting off with this AI, and we just got $500 billion from the U.S. government. So I don't know. I'm excited. I just don't know. I don't know anything about the money part of this, and obviously that's the biggest incentive. And I kind of like how competitive it is because it's kind of fun going into industries. Like I came into the algo trading industry, the most secretive industry in the world, and I showed everything. I busted it open. I busted it open for everybody. Now anybody in the world can go to youtube.com and type in Moondev. They can type in Moondev. You could go over here real quick. Go, if you want to automate your trading, you just go to Moondev. And then you could watch all my videos, dude. And I literally automated my trading here live on YouTube. You watched it from beginner, barely knowing how to code 3 years ago. I spent about a year probably coding, learning to code. And then I started to show you how to automate your trading because I was automating my trading. So that was almost a year ago, dude. Or, sorry, almost 3 years ago. I don't even know. Time is irrelevant, bro. March 3rd, 2022. So I learned how to code somewhere before this, like 6 months, a year. I don't know. Time is irrelevant. It was definitely all last cycle. Last cycle, I was not looking at charts. I was, but I was trying to like go from, yo, manual trader, let's automate this. So that was last cycle. I said, dude, it's so easy to round trip here in crypto. I'm leaving this cycle with something. So I bought a crib cash, not because I wanted to, but because I had to.
2 to 4, and now you're back at it again, 7 to 9. Look how much more training I have done by simply starting at 4. Right? And so now you do that, and as the years go on, the separation that you have with your competitors and your peers just grows larger and larger and larger and larger and larger. And by year 5 or 6, doesn't matter what kind of work they do in the summer, they're never going to catch up.
They're never going to catch up, dude. They're never going to catch up, dude. So, yeah, if you want inside the Discord, the boot camp has closed. So you can't get into that, but you can get into the Discord. Here you go. I'll put the Discord link here if you guys are interested in this BitTensor stuff. Here it is. Yo, how do I set that thing up, dude? Here's Matty. I got you, bro. Let's make just like a BitTensor chat. How about that? Chat archive. I should do it in the members area, but now the members area is closed, so that's awkward. I don't know. I'm not gonna make a BitTensor chat yet because I don't know how in I am yet. I'm still doing my due diligence. I haven't even read the white paper. Let's read it, dude. Okay, so this is the real ish right here. Nobody's gonna read the white paper except for me. Let's do this first, though. Chat GPT. Above is the BitTensor white paper. Please break it down to me in easy to understand language because you know it's probably confusing as shit. So explain it to me, at like maybe like a senior high school level, just so we can all understand it. And I will read the paper after, but I want you to walk me through it so I fully understand it. And then once I do read it, then I'll double understand it and I'll take notes and all that. But you're pretty much teaching me everything in the white paper now, and then I'll read it for real after. This is just how I like to do things. I like repetition, dude, because I was a hooper, dude. So I used to not be good at shooting threes, dude. And then I got in the gym for 4 hours a day. Maybe not 4 hours, but like 500 shots a day. And then I became one of the best 3-point shooters, dude. Just like that. I wasn't able to dunk when I was a kid. So I went ahead and I started going to the gym every single day. And I put a mat there, a wrestling mat. I couldn't get to the rim. I couldn't jump that high yet. I was just a kid, dude. But how did I end up being able to go through the legs, dude? How can I do 360s and through the legs and shit like that when I couldn't even dunk back in the day? Well, I started slow. I put that wrestling mat there and I started jumping off the mat. I started dunking with my friends. This shit was fun as fuck. I learned how to dunk. I was way too short to dunk, but by the time I was tall enough and I was strong enough to jump, dude, I already knew how to do these moves and stuff because I used the mat before or I lowered the hoop, So repetition, 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 repetition. That's all I've ever done. It all started with sports, dude. I know it's militant. It's militant. Sports are militant, especially when you get to a high level, like a college level, bro. I swear to God, if I did not hoop, bro, I wouldn't have learned this mentality, dude. My idol was Kobe, bro. So, of course, repetition is key. That man did not do anything except for hoop and get better and better and better. And I did that for years and years. I got paid, bro. I got paid. That's fire. I got free school and I got paid off repetition. So I'm just kind of recreating that here in this different in this new world, this new nerd world. But I've always been a nerd, bro. It'd be hoop and then I'd go home and game or I sit on my laptop. So yeah, I don't know why I'm talking about that, but let's go ahead and read this. Let's see here first. I just want to ping brains sometimes. That's all. Feel free to ping me in the chat, Kyler Davis. Yeah, Kyler's a real one, bro. Yeah, Moon. BitTensor is definitely fucking dope. Thank you, dude. Somebody just introduced me here to it today. I've heard a few people out here in Puerto Rico talk about it, but they essentially said it was like the AI exposure that they have, and I just faded it because there's plenty of other Solana stuff going on. But as tides change, I move, baby. What do you use for the voice text, Sir Dev? This is called. God, I need to figure out what the name is called, to be honest. Flow something. It's called Whisper Flow. Whisper Flow. This one right here, dude. It's fucking fire. It's probably the most fire use case I've seen in a while. Whisper Flow, not voice flow. Whisper Flow. Your models develop to your hardware. I guess I'm still grasping. Me too, dude. And every subnet has a purpose. Like there's one for price prediction. I'm very curious about the subnets, what they look like. Let's read through what ChatGPT said based off the white paper, and then let's read the white paper, and then we'll watch some more videos. There's a 2-hour training on how to do this, so maybe I'll watch that if I get convinced. I'm still not fully convinced, dude. I'm not fully convinced, but every single thing that's happened in crypto has come through this chat. and it's Stony Sunday, bro. It's Sunday fun day. We're gonna go ahead and we're gonna dive into BitTensor, okay? It reasons for 12 seconds. Here's a breakdown in plain English, step by step. What is BitTensor? Imagine a huge decentralized market for artificial intelligence. Instead of one big company deciding which AI is best by testing them on a single task like image recognition, BitTensor creates a system where lots of different AI models, we'll call them peers, work together and even judge each other. They all earn rewards, tokens, or stake based on how much they contribute to the overall network's performance. How do the peers work? Well, the basics of an AI model. Think of an AI model as a function that takes in data like images and text and gives an output like prediction. Like each peer is one of these functions, training on data. Each peer learns by looking at its own set of examples, its data set, and trying to improve how well it works. They all try to minimize loss, a measure of how wrong they are. The network of peers. There are many peers connected in a network. They share information with each other so that every peer can learn not only from its own data, but also from what other peers produce. Okay. So I'm kind of understanding it. I think what's going to help a lot is going through the different use cases to fully understand it. Ranking and rewarding peers, peer ranking. Instead of using a single test score, peers evaluate one another. They vote on the value of each other's outputs by assigning scores. If removing a peer makes the network perform much worse, that peer is considered very important. Incentives and stake. The network keeps track of a stake for each peer on a digital ledger, like a blockchain. The more useful a peer is, the more stake or tokens it earns. This stake not only shows its value, but also gives it more influence in the network. Why it matters. Rewarding based on contribution means that even smaller or older models can be valuable if they add something unique to the overall intelligence of the network. Preventing cheating and collusion. The problem of collusion. What if a group of peers start voting for each other just to pump up their values without really helping the network? That's collusion, and it would ruin the system. Consensus mechanism. To stop this, BitTensor uses a consensus mechanism or a system. Each peer gets a bonus if many other peers, ideally more than 50% of the network stake, trust it. This bonus is calculated with a smooth sigmoid function. Like, think of it like a ramp that only starts giving extra points once you've trusted by enough people. Nonlinear rewards. The rewards are designed to increase super linearly. This means that if you're trusted by the honest majority, your rewards increase much faster than those of a small group trying to collude. Bonds, investing in each other. What are bonds? In addition to stake, peers can form bonds with one another. Imagine it like a mini investment. If you believe another peer will do well, you can bond with it. If that peer later becomes valuable, your own rewards get a boost too. Speculative rewards. This system encourages peers not just to vote for themselves, but to invest in the peers they think will be useful in the future. How the network runs, data sharing. Each peer sends out batches of its data to its neighbors in the network. The peer respond with their own outputs, and these responses are then used to update everyone's models. Learning to connect. As a network grows, it might become too heavy to talk to every peer all the time. So they use a method called conditional computation, where a peer learns which other peers are most relevant for a given task, like a smart directory, and only connects you to the people who can help the most. Standardization of data. For smooth cooperation, all peers agree on a
You have
common
to,
way.
in a business like this, just keep making things better, keep improving the system, because other parts of it are going to wear out after a while. People will catch on to this or they'll catch on to that. So you just have to, like in any business, you just have to make things better and better and better, because that's what everyone else is trying to do.
Yo, so I like this idea, if this is big enough to actually be a trade, okay, I'm thinking pie in the sky. I'm thinking next Bitcoin, not my words, but Maddie's, and that's fine. I like the bias. That's what I'm leaning into right now. Okay, but what I like about this is you can get exposure to crypto based off of US assets, meaning I can use a debit card linked to my bank to pay for the VPS or the GPUs, and now I'm turning cash, cash or credit into crypto. I always like those types of arbs because credit is so easy to get here in America. It's so easy to get. And that's why I will never fade America. I will never give up my passport. I will never move to Dubai. I'll never leave this great country because we have such a privilege in our banking system, dude. To be able to like hit zero, you could be so down bad and still make it in America because you can go get a credit card for $5,000. And if you know how to code, dude, you can turn that 5,000 into anything. That's what I love. That's what I love about America, bro. Our credit system. It's also very dangerous if you're not a builder. Because, you know, if you're just a girl that's uses their credit card to buy a bunch of shit and you get a bunch of debt, that's not too good. But if you're a builder, dude, if you're an entrepreneur, you can turn credit into anything. I don't know about you, but that's how I won. That's how I won when I was 18. I don't know why they gave me, when I went to college, the college I went to, I went and got I went to the local bank, dude, in the middle of the country, too. In the middle of the country, dude. Not even on the west, not even on the east. No way. They gave me 15 G's on a limit at 18. I'm like, what? I've never seen this. I've never seen this much cake before. I can run it up. And then I just built. I hired people, of course, so I had to go into debt in my first business, dog. But I just kept building and it worked. But I wouldn't have been able to do that if I was like growing up in Pakistan or some shit. So I'm so grateful for just being born here. That I hate when I see Americans get all like, oh, blah blah blah, America's not great, yada yada. It is great, and people would die to live here, dude. So I'll never give that up. Knowledge extraction, distillation. Why distillation? Sometimes you want a smaller, faster model that can work on its own offline without needing to constantly chat with the whole network. How it works. A smaller student model learns to mimic the behavior of the entire network by watching how the network responds. This process is called distillation, and it helps you take the collective intelligence and pack it down into a simpler form. Overall goal, BitTensor is essentially creating a self-organizing, self-rewarding ecosystem of AIs. It monetizes AI contributions. Individual researchers or developers, that's us, can earn tokens for their models, encourages diversity. It rewards not just the best model on one narrow task, but any model that adds useful, unique knowledge, prevents manipulation. Through consensus and nonlinear reward structures, it makes it hard for dishonest groups to game the system. Supports scalability by standardizing inputs and outputs and using conditional computation, it can grow to include many different types of data and models. Collusion, in simple terms. Imagine two groups. Group one, Group A is honest, and Group B is trying to cheat by boosting each other's scores. How rewards work. Group A has more than half of the total trust and stake. They'll get rewarded much more than Group B. Over time, Group B's share of the reward shrinks unless they start including more honest peers. In summary, BitTensor proposes a new way to create, share, and reward AI. It lets AIs judge each other and earn rewards based on how much they help the overall system. By using clever methods to prevent cheating and by encouraging models to invest in one another, it builds a decentralized intelligence marketplace. This way, many different kinds of AI can thrive together, and everyone from big companies to individual developers can develop from contributing to a common, ever improving pool of machine intelligence. I hope this is this clears things up. Once you read the full paper, these key ideas will make a lot more sense. Do you have any sense of how much BitTensor you can earn per month or per day or per year. I want to make sure this is a big enough opportunity to actually attack. Also, do you think this is a directional trade? Meaning, are we mining Bitcoin at $2, hoping it's going to 100,000? And or do you think this is a profitable endeavor to just arbitrage right now, meaning mine and then sell the BitTensor? Or do you think it's directional? I'm just trying to get a grasp on how big this opportunity may be, because I don't want to push resources towards it if it's not fairly large. All right, let's see here. And every subnet has a purpose, like there's one for price prediction. So theoretically, we could create an algo trading focused subnet. Interesting, dude. It's Stony Sunday. It's Sunday fun day. Time to learn about BitTensor, bro. Sounds as excited as Christmas morning. I love Sundays, dude. It's hard to pin down exact numbers right now because the rewards you earn depend on a lot of factors, like how much computing power and stake you contribute, how many other peers you're competing with, and how the network's overall growth and trust dynamics evolve. Right now, the white paper doesn't provide a you'll earn X tokens per day, month, year figure. That said, here are a few points to consider. Dynamic rewards. Your earnings come from how much your node or AI model contributes to the network. If your node is trusted by a large portion of the network, meaning it's really useful, you'll earn more. But if you're in a crowded part of the network, the rewards might be spread thinner. Directional versus arbitrage. Directional trade. Many see this as a long-term bet on the network's success, similar to how early Bitcoin miners held on to their coins, hoping they'd appreciate massively. If you believe the network grows and the token becomes more valuable over time, then you're in for a directional play. Arbitrage opportunity. On the other hand, if you're looking at a short-term strategy, mine tokens and sell them immediately for a profit, that's more like arbitrage. At this stage, there's less clarity on short-term price dynamics, and it might be riskier to try and capture an immediate profit. Risk and uncertainty, just like with emerging crypto projects, the real yield, both in terms of tokens and their market value, will only become clear once the network is fully operational and a larger number of peers are participating. Early estimates are highly speculative. Bottom line, if you're considering putting resources into BitTensor, think of it more like a long-term directional investment, betting on the network's future value, rather than a guaranteed steady arbitrage play. If you believe in the potential of a decentralized AI market and the network's growth, then it could be a big opportunity. But if you need a predictable near-term return, the uncertainties might be too high at this point. Always remember that these kinds of projects carry risk, so it's more important to do further research and consider your own risk tolerance. Okay, so this is a directional play. This is a directional play, so I really need to be tau pilled in order to contribute. Because, dude, there's two things you can do here, right? If you truly believe that this is the next Bitcoin, just fucking buy it. You know? That's easy. Also, if you think it's the next Bitcoin, you better fucking mine it. That's easy, for us at least. It's probably not going to be easy. I don't want to say it's going to be easy. But we're developers, we're data dogs, and we got the sauce, bro. We got the sauce, bro. So, I don't know. I'm not fully tau pilled yet. So, I'm still doing research here. And this is obviously a very competitive thing to mine, because if it's free money is very competitive. Let's read the BitTensor, a peer-to-peer intelligence market. This is the white paper. Louis says, do it for research. Yes, dude. We're going to learn something, that's for sure. Maddie says, decentralized mines. Check the documentary for the tau pill. BitTensor documentary. This one right here?
Yeah, a great quote that said, "Rest at the end, not in the middle." And that's something I always live by. You know, I'm not going to rest. I'm going to keep on pushing now. There are a lot of answers that I don't have, even questions that I don't have. But I'm just going to keep going. I'm just going to keep going, and I'll figure these things out as you go, right? And you just continue to build that way. So I try to live by that all the time.
Rest at the end.
Rest at the end.
2.5 months, 1 million, 3.5 years. Netflix, days to 1 million. Instagram, days to 1 million. ChatGPT, okay, tease me more, come on. Days to 1 million. OpenAI, Microsoft, Google, and AWS dominate 84% of the generative AI market. 90% of global media is owned by 6 companies. 90% of US telecom is owned by 3 companies. 90% of global credit card transactions are handled by Visa and MasterCard outside China. Centralization by big tech invades privacy, amplifies biases, and concentrates power. Super nerdy so far.
That humanity believes is our pinnacle element.
I'm not about to watch that right now. I'm about to read this. As with other commodities, markets could help us efficiently produce machine intelligence. We propose a market where intelligence is priced by other intelligence systems peer-to-peer across the network. Peers rank each other by training neural networks which learn the value of their neighbors. Scores accumulate on a digital ledger where high-ranking peers are monetarily rewarded with additional weight in the network. However, this form of peer ranking is not resistant to collusion, which could disrupt the accuracy of the mechanism. The solution is an incentive mechanism that maximally rewards honestly selected weights, making the system resistant to collusion of up to 50% of the network weight. The result is collectively run intelligence market that continually produces newly trained models and pays contributors who could create the information theoretic value. Okay. Introduction. The production of machine intelligence has come to rely mostly entirely on a system of benchmarking where machine learning models are trained to perform well on narrowly defined supervised problems. While this system works well for pushing the performance on these specific problems, the mechanism is weak in situations where the introduction of markets would enable it to excel. For example, intelligence is increasingly becoming untethered from specific objectives and becoming a commodity that, 1, expensively mined from data, 2, monetarily valuable, 3, transferable, and 4, generally useful. Measuring its production with supervised objectives does not directly reward the commodity itself and causes the field to converge towards narrow specialists. Moreover, these objectives do not have the resolution to reward niche or legacy systems. Thus, what is not currently state of the art is lost. Ultimately, the proliferation of diverse intelligence systems is limited by the need to train large monolithic models to succeed in a winner-take-all competition. Standalone engineers cannot directly monetize their work. And what results is centralization, where a small set of large corporations control access to the best artificial intelligence, like OpenAI. A new commodity needs a new type of market. This paper suggests a framework in which machine intelligence is measured by other intelligence systems. Models are ranked for informational production regardless of the subjective task or data set used to train them. By changing the basis against which machine intelligence is measured, the market can reward intelligence that is applicable to a much larger set of objectives. Legacy systems can be monetized for their unique value. And three, smaller diverse systems can find niches within a much higher resolution reward landscape. The solution is a network of computers that share representations continuously and asynchronously peer-to-peer across the internet. The constructed market uses a digital ledger to record ranks and to provide incentives to peers in a decentralized manner. The chain measures trust, making it difficult for peers to attain rewards without providing value to the majority. Researchers can directly monetize machine intelligence work, and consumers can directly purchase it. Interesting, dude. Interesting. Interesting. Okay, here's the tough part, bro. We begin with an abstract definition of intelligence, Hinton et al. In the form of parameterized function trained over a dataset d equals xy to minimize the loss. Our network is composed of n functions, peers, where each is holding 0 or more network weights s stake represent on a digital ledger. These functions, together with losses in their proper proportion of stake, represent a stake weighted machine learning objective. Our goal is the distribution of stake I as an incentive to peers who have helped minimize the loss objective, and importantly, in such a way that it is difficult for a small proportion of stake to collude as means to maximize their distribution in the network without minimizing the loss. In this paper, we suggest this can be achieved through peer ranking, where peers use the outputs as inputs to themselves and learn the weights, where peer I is responsible for setting the ith row through transactions on a digital ledger. Setting weights using an Fisher's information pruning score, LeCun et al. In the ranking calculation, achieves an idealized scoring where each peer's incentive is equivalent to its pruning score, the cost and entropy induced by removing it from the network. However, this approach is not resistant to collusion, where peers vote for themselves, notably instead of using and set weights to enhance their own inflation at the expense of the network. This attack is trivial since the digital ledger cannot audit the parameters of each model, only the intermodal weights, W. We extended the naive ranking method to evade collusion with an incentive function, which limits reward to peers that have not reached consensus in the network, assuming no group of peers holds more than the majority of stake in the system. Then peers can only attain inflation by working to attract votes from the majority, a core assumption in many decentralized systems like Bitcoin. Reintroducing our terms, our incentive mechanism requires a stake vector S and a set of weights, W, where rows are inter-peer rankings. We also infer a trust matrix T from the weights, where T equals 1, and only if there is a non-zero edge between peer I and J. We define peers who have reached consensus as those with non-zero edges from more than 50% of the stake in the network. This is simply the normalized values.
Hey, dickhead, get your mind right. Don't preach to me about my perky habit, bitch, this is my life.
To ensure the mechanism is differentiable, we define this computation using the continuous sigmoid function. The sigmoid produces a threshold-like scaling that rewards connected peers and punishes the non-trusted. The steepness and threshold point can be modulated through a temperature Q and shift term X. Consensus function is this with temperature Q equals 10 and X equals 0.5. The activation takes the trust scores and produces an exponential scaling up to our inflection point where a peer is connected to the majority. We use consensus term to scale the original rankings. As peers attain more weight in the network, they increase their inflation exponentially up to 0.5. In section 10, we show how this ensures that the larger of two competing subgraphs comes to own an exponentially larger proportion of the network through inflation. My dog Kyler says, yo, imagine you have a BitTensor agent that can just go ahead and understand all this and optimize its performance. I turned that video into a project plan, Flash 2.0. I posted in the members chat. I appreciate you, bro. I'm going to check that out here soon. This consensus described above protects against naive collusion by making it difficult for small groups to achieve inflation. However, it does not provide an incentive for correctly selecting weights. We introduce these incentives by adapting the inflation mechanisms with a speculation-based reward in the form of bonds B. Here, B is the proportion to the bonds owned by a peer. Bonds accumulate at each step, similarly to token inflation, where B equals W. In this way, peers accumulate bonds in the peers they rank us, thus bonding themselves to those that they are connected to. Using the B bond matrix, the chain redistributes the normal incentive scores like market-based speculation on traditional equities. The peers that have accumulated bonds in peers that others will later value attain increased inflation themselves. Thus, it makes sense for peers to accumulate bonds in peers, which it expects to do well, according to other peers with stake in the system, thus speculating on their future value. Finally, we adapt this mechanism slightly to ensure peers attain a fixed proportion of their personal inflation. For instance, 50% becomes the mechanism step update, which determines network incentives across the N peers. The incentive function in section 2 rewards highly trusted peers. However, it may not solve the collusion problem. If the honest nodes do not reach consensus, notably, loose, unused stake or incorrectly set weights will detract from the inflation proportion of honest peers in comparison to a colluding subnetwork. The honest network, although holding more stake, may not gain enough inflation to overshadow its adversary. The dishonest subgraph need only attain enough inflation to compete with its largest competitor, not to entirely dominate the network. This attack is possible when the majority of token inflation is being distributed towards peers which are non-majority trusted in the graph. The chain can measure this through the loss through a loss term. The term is negative if the majority of inflation is being distributed towards peers with more than 0.5 consensus. The chain uses the loss calculation as a peg. By increasing the number of weights the average miner sets across the network, the chain can ensure consensus. The left network has low consensus. The system is not resistant to a cabal with less than 50% of the stake. The chain increases the number of edges set by peers. At this point, the majority of inflation flows to peers with majority consensus. The steps to set to run a peer in the network. The peer defines its data set. At each training iteration, the peer conditionally broadcasts batches of examples from D to its peers X equals batch size, sequence length, input. Okay. The responses F equals blah, blah, blah. Each of the common shapes FIX, batch size, sequence length, output are joined using the gating function and used as input to the local model. Comparison against the target labels produces a loss gradient which backpropagates through Fi and out to the network. During 2 and 3, the peers learn the weights of their row by measuring the value of the signals produced by their peers. At distinct time step T, participants submit changes to the weights to update the ranking R, inflation I, consensus terms C, and bond distributions B. The chain measures loss and optionally distributes newly minted stake into this network S. According to the bond ownership tensor standardization, a common encoding of inputs and outputs is required for the various model types and input types to interact. The use of tensor modalities can be used to partition the network into disjoint graphs. At the beginning, the network can be seeded with a single modality, text, then expanded to include image, speech, and tensor. Eventually, combinations of these modalities can be added, for instance, text image, to bridge the network into multimodality landscape. Incentives to connect modalities can be integrated with the same trust scaling suggested in section 2. Eventually, successful models should accept inputs from any modality and process them into a useful representation. For consistency, we can use a standard output shape across the network, batch size, sequence, dim, output, dim, similar to the common tensor shapes produced by language and image models. By working on abstract input classes, we can ensure participants work towards a general multitask understanding. Participants may use completely distinct computing substrates, dataset, LAMPL, blah, 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 models and strategies for maximizing their incentives in the market. It makes sense for peers to work on unsupervised data sets where data is cheap and privacy not required. Conditional computation. As the network grows, outward bandwidth is likely to become a major bottleneck. The need to reduce network transfer and a method of selecting peers is required. Conditional computation can be used where peers learn through gradient descent how to learn and prune neighbors in the network. For example, a product key layer or a sparsely gated layer. The conditional layer determines a sparse combination of peers to query for each example and multiplicatively rejoins them, cutting outward bandwidth by querying only a subset of peers for each example. The method can be drastically increase output bandwidth, allowing peers to communicate with many more neighbors in the graph. In essence, the layer acts as a trainable DNS lookup for peers based on inputs. Furthermore, being trainable with respect to the loss, it provides a useful proxy for the weights. Dependence between functions ensures that models must stay online and cannot be run in production. Breaking this dependence can be achieved using distillation, Hinton et al., a compression and knowledge extraction technique in which a smaller model, the student, mimics the behavior of the remaining network. The distillation layer is employed in conjunction with a conditional computation layer where the student model learns to mimic the network using the cross entropy between the logits produced by the gating network and the student's prediction distribution.
Hey, dickhead, get your mind right. Don't preach to me about my perky habit, bitch, this is my life.
Because the distilled model acts as a proxy for the network, models can be fully taken offline and evaluated. Recursion through the network is also cut between components, allowing for arbitrary network graphs. If models go offline, their peers could use the distilled versions in place. Private data 6 can be validated over the distilled models instead of querying the network. Eventually, components can fully disconnect from the network using the distilled models to do validation. Yep, this sounds like the DeepSeek story, he says. Our goal is to our goal in this work is the production of ranking R equals Ri over peers, where the score R represents a participant's information theoretic significance to the benchmark. Following Lacoon and Lacoon et al., Ute et al., it is reasonable to define this significance by equating it with the cost of removing each peer from the network. We can derive this score analytically. Fxi is a perturbation of the jth peer's input with the ith peer's is removed from the network. Yo, Creative, what's up, dude? 777. You must expect great things of yourself before you can do them. MJ, the GOAT, bro. Note, when the error function QJ is the twice differentiable cross entropy, the HQJ is its Fisher information matrix. And Ri is suitably measured as each peer's information significance to the network as a whole. However, information theoretic weights require the full Hessian of the error. In practice, it is more reasonable to use heuristic to propagate a contribution score from the error function through to the inputs U et al. For instance, weights from the gating layer section 6 provide a useful differential proxy collusion. We consider the scenario where a subnet of peers in the network have formed a cabal, a set of colluding peers attempting to maximize their inflation without accurately scoring their neighbors. The fight between the honest graph A and the stake SA and the disjoint cabal with stake B can be determined by the proportion of network stake held by each. The honest graph must attain more information to maintain its dominance, protect the network. We assume that the proportion of stake in the honest graph is more than that found in the dishonest graph, and that the chain has reached consensus. Since all peers in B are disjoint from A, our loss term is positive because L is under O. It must be the case that RA is under O. 0 is negative, and there are peers in the honest subgraph who are connected to the majority. As the chain progresses, newly minted stake is being emitted to our inflation rate T or R in proportion to I equals R times T. Importantly, the gradient of the incentive function with respect to the stake is positive and superlinear, at our inflection point between the honest and dishonest graph. Notably, this ensures that the amount of stake held by each subgraph reflects on a non-linear change in their inflation at the next iteration. Initially, since SA is over 0.5 and SB is under 0.5, the proportion of stake emitted in subgraph A exceeds that in subgraph B, and subgraph A's incentive grows superlinearly compared to B. The result is that the ratio stake SB over SA at B decreases. The cabal must continually add stake to its subgraph to maintain over time. We consider this proportion between the competing graphs under continuous inflation, converting to Python code. Conclusion, we have proposed an intelligence market that runs on a P2P network outside of a trusted environment. Crucially, the benchmark measures performance as representational knowledge production using other intelligence systems to determine its value. The fact that this can be done in a collaborative and high-resolution manner suggests that the benchmark could provide a better reward mechanism for the field in general. To achieve this aim, the paper began with the definition of a P2P network composed of abstractly defined intelligence models. We showed how this framework allowed us to produce a ranking for each peer based on the cost to prune it from the network. Peers negotiated this score using a set of weights on a digital ledger. However, the system was incomplete without mechanisms that prevent participants from forming dishonest graphs. To resolve this, we propose an incentive scheme based on peer connectivity, which exponentially rewarded peers for being trusted by a large portion of the network. This ensured that over time, dishonest subgraphs decay to irrelevance. Following this, we showed 1. How peers reduce the network bandwidth by learning connectivity using a differential layer, and 2, they could extract fully network disconnected machine learning models to run in production. The result is an intelligence market that rewards participants for producing knowledge and making it available to new learners in the system. Fire, bro. Yo, why is everything called at all? I don't know. Super PvP, damn. Why is everything called at all? I don't know. I think that's like saying something to BitTensor mining plan here. Let's go ahead and check this out, dude. Thank you, Kyler, for spinning this up. Don't hack me, bro. I'm over here downloading stuff off the internet. Kyler's my boy, though. BitTensor mining plan, a comprehensive plan. Thank you, Kyler. Here's a detailed plan for exploring BitTensor mining, including a profitability analysis and a step-by-step project plan. Understanding BitTensor mining from the video and research core concept. BitTensor is a decentralized network that incentivizes machine learning and other specialized tasks through a cryptocurrency called Tau. Unlike Bitcoin mining, pure computational brute force, BitTensor mining is useful work contributing to various subnets. Key players, miners, perform the specialized work required by a specific subnet, running AI models, storing data, making predictions. They compete for rewards,